Hello, and welcome to another episode of My Home, My Sale, the Homeowners Corner. Today, we're going to briefly be talking about seller financing, bridging the gap in home buying. Let's get started. In today's fast-paced real estate market, traditional home financing methods are becoming increasingly challenging for both buyers and sellers. Rising interest rates and soaring home prices are causing many aspiring homeowners to pause their dreams. On the other side of the coin, sellers face the dilemma of finding qualified buyers who can secure a mortgage in this competitive landscape. But what if I told you there's an alternative path, a win-win solution that can help buyers and sellers alike navigate these turbulent waters? Enter seller financing, also known as owner financing, wraparound mortgages, or subject-to financing. These creative financing methods are gaining traction as more people discover the advantages of sidestepping traditional lenders and banks. Real estate investors have been using this strategy for decades. The basics of seller financing. At its core, seller financing is a simple yet powerful concept. Instead of relying on a mortgage company or bank, the buyer secures the property directly from the seller. The seller effectively becomes the lender, providing the financing needed to make the purchase. Let's briefly talk about a real-life example, Mark and Emily's home buying journey. Meet Mark and Emily. They found their dream home, but with rising interest rates, they're hesitant to commit to a traditional mortgage. What Mark and Emily do is make a down payment directly to the seller, signaling their commitment to the property. This down payment acts as their initial equity in the home. Emily and the seller prepare a seller financing agreement. We'll talk about seller finance agreements in a little more detail in another blog post. With the seller financing agreement in place, Mark and Emily assume the seller's existing low interest rate mortgage. They make monthly payments directly to the seller, who in turn continues making their original mortgage payments. The seller can offer Mark and Emily a balloon payment option where they need to pay off the remaining balance after a set period. Typically, this is 3 to 5 years. Also, Mark and Emily have the option to refinance the seller financing arrangement before the balloon payment is due, securing their own mortgage at a prevailing interest rate. What are the benefits to home buyers? Lower interest rates. Assuming the seller's mortgage allows Mark and Emily to enjoy the low interest rate environment, saving them money on monthly mortgage payments. By making a down payment directly to the seller rather than securing a traditional mortgage, Mark and Emily reduce their initial cash outlay. A faster closing. Seller financing can offer a quicker and smoother closing process compared to traditional financing, making it an attractive option in competitive markets. What are the benefits for sellers? Steady income stream. Sellers receive a steady income stream from the buyer's monthly payments, providing them with a reliable source of income. Offering seller financing can attract more potential buyers, especially those who may be deterred by rising interest rates or stringent financing requirements. Sellers can also negotiate the terms of the financing arrangement, tailor it to meet their specific needs and financial goals. To ensure a successful seller financing arrangement, both parties should consider the following. The seller financing agreement should always be documented in writing, clearly outlining the terms and conditions, including the down payment, interest rate, balloon payment option, and repayment period. It's also important to seek legal advice from a real estate attorney, a real estate agent, a real estate professional to ensure that the contract complies with local laws and protects the rights and interests of both parties. There's more involved to a specific real estate contract agreement. This blog post is really just to get the conversation talking about seller financing, and this is an option that buyers and sellers should consider in today's market. Seller financing is a dynamic solution for buyers and sellers looking to bypass the traditional lending process. By assuming the seller's mortgage and enjoying lower interest rates, aspiring homeowners such as Mark and Emily can make their homeownership dreams a reality, even among rising interest rates. For sellers, offering seller financing open doors to a wider pool of potential buyers while providing a steady income stream. With a well-documented agreement and legal guidance, seller financing can be a key to a successful and secure home sale. So if you find yourself navigating the challenging landscape of real estate financing, consider the benefits of seller financing and embark on your home buying or home selling journey with confidence. Thank you very much. You guys have a wonderful day.